Greetings, fellow investors. Welcome to Nordic Finans, where we help you realize your financial goals. In today's video, we'll discuss the question, when should you sell a stock? My name is Lucas.
And I'm Marcus. And before we get into the video, let me ask you this. Have you invested in the subscribe button and deposited a like yet?
NANI?
Nice.
So this is going to be the final video in our playlist, the investment cycle, or how to invest in individual stocks. And we're gonna cover here when you should actually sell a stock, because we've talked so far about how to buy, when to buy, why to buy, and now finally, when should you actually sell a stock? So let's dive right into it. When should you sell a stock? We'll start by inverting the question and just quickly discussing when should you not sell a stock. Reason number one, when everyone else is panicking and everyone's just like, don't be a hero, it's going to zero. Then I think it's a great time to just sit back, relax a bit, think of what you're doing, think about the business. Is it still a good business? Is it gonna come out of this alive? And just take it easy for a second.
Yeah, because we're working with the presumption that you have only invested money that you are willing to lose. So in this case, I don't think it makes much sense that you're selling at the point where everyone is panicking and they're saying, "Don't be a hero, it's going to zero," like we said, and that people are panic selling. It's driving down the prices, even though it might be a fundamentally sound business. So in that case, since you have only invested money that you would be willing to lose if it came to that, I don't think it's a good time to sell, because it might recover just a brief time from after this panic selling has been going on. The market can be so volatile sometimes.
Yeah, if anything, as we've talked about in the past, that might be a reason to buy. Remember, greedy when others are fearful and fearful when others are greedy. Next, we have, is this the peak? It's the highest it's ever been, like ever, in the history of ever. It's so high. Reason why that's, like, at first that might sound like a solid argument, but then when you look at a stock market, it's quite a lot of peaks in a stock market, and it's just like, it's always the highest until it's the next time it's the highest it's ever been. So you might have to think twice about that.
Yeah, it might. We're actually going to talk about this later in reasons to sell, when we think the valuation has become a little bit rich. But think about this, for instance. I think Apple is a very good example of this. The stock price of Apple has just increased over the years, and a lot of people have said that the valuation is too high. It's way too high all the time, and they are selling out of it. But so far, Apple has just increasingly increased stock price. So even though it might be very high, like Lucas said, it might even be the highest it's ever been. It might reach new highs a long time after this as well, and reach new peaks and new peaks. So just because it's at the highest point right now does not mean it's necessarily a good time to sell.
Yeah. And then finally, we just wrote here, but I need new shoes. Like, if you're just selling a long-term investment that you've spent a lot of time of finding, and you should really think of this investment as sort of a cash producing. Wasn't an asset, it's sort of, it's a cash machine for you. It increases in value with time, so it sort of makes money for you. And then you sell your little money machine to buy new shoes. I don't know, to me that sounds crazy. And of course, at some point when you have a lot of cash machines, maybe then you can start selling like some of them to buy things you need. But the whole point with investing is that we try to put money that we don't need, and then if you need something, then you need to try to maybe invest less next month or something. But you should leave the money you've already invested alone as much as possible.
Yeah, we're gonna touch more on this point also in reasons to sell, because there's a point, of course, in investing that eventually you're gonna want the money you've actually spent, because money is only good for actually buying things, so to speak. So at some point you will want to maybe sell or decrease, sell out of your position a little bit to buy stuff. But then again, if this is the kind of investor that you are, that you want some cash flow, so to speak, maybe you can tailor your portfolio a bit towards that and have some dividend stocks, for instance, so that you can get some dividends over time, that maybe you could buy these shoes without actually have to trim your position, so to speak.
Yeah.
Because you shouldn't, especially if you have a long-term kind of position, you shouldn't sell out of this position only to do unnecessary purchases, so to speak. Of course, if you have an emergency, that's another story. But at least don't see it as money that you can sometimes tap into when you think you have the need, so to speak.
Exactly, yeah, if it's not a real need. And Robert Kiyosaki, the author of Rich Dad, Poor Dad, and like a bunch of other books, who I'm not the biggest fan of, but he has some good ideas. And he talks about that what he likes to do, if he's able to, is first buy enough asset or money producing assets that he can then buy what he wants with the money produced from the assets. Of course, that's not really realistic in the beginning, but when you start making more money and you want to like spoil yourself, a great way to do that without feeling bad at all is if you can first invest so much money that just the interest that you've generated from all of your assets covers the amount of what the thing you want to buy costs you. So I think that's just an idea to have in the back of your head, that's something that's really cool to strive for. Okay, but now let's move on to what the video was actually supposed to be about. The reasonable reasons to sell a stock, when you should actually sell a stock.
There's definitely a lot of reasons why you would want to sell stocks, because eventually you will probably want to trim your position a little bit. Some people, that would be the goal, would be that you're starting to trim your position when you get into the retirement age and you have built up your position, your stocks all your life, and started investing into maybe index funds or ETFs or something of this nature. And then when you get older, you can start trimming these positions a little bit, certainly in the case that they are not dividend producing, for instance, to maintain your lifestyle and have some money, so to speak. For some people, that might even just be extra money. So we have listed a few reasons here why you would want to sell stocks. And the first reason we have mentioned is, of course, if you actually need the money. Earlier in the video, we mentioned that you shouldn't view this as money you can fund money, so to speak, that you can tap into when you need it. But of course, there are situations where you actually need to maybe sell off some of your stocks to cover expenses that you simply have to pay.
I think the key word to use here is want and need. So you shouldn't sell because you want the money, but you can sell if you need the money. So then the second reason we've listed here is if there's a fundamental change in the business. We've talked a lot about this in the rest of this playlist, investing in individual stocks, especially I think the last video where we talked about how to find like the perfect stock almost, and we've likened a business to a castle with the king and the queen being management, the castle itself being sort of the financial situation of the business, and then finally the moat being sort of the competitive advantage of the business. If there's a change in any of these three components for the negative, and it's a major change for the negative, then this might be a really good time to get out before things start going bad. Because especially management, I've heard some horror stories about, but again here I like the personal experience, so this is things that I've more read about or heard from other people's experience, but I think this is something I agree with a lot, and it makes a lot of sense that if suddenly the captain of a ship dies and no one is there who knows how to properly steer the ship, you're going to be in a lot of trouble.
Yeah, but the valuation might not follow it instantly. So you might have a small window where you can sell out without these problems becoming apparent. And then it might be a reasonable time to actually sell out of your position, because maybe the new management could pick up the reins, so to speak. But if that's not a risk you're willing to take, then you should definitely try to exit your position before this risk start to play out, especially if you think it will be for the negative. Then we also have a brief mention that kind of ties into this. If you are buying, and we definitely are proponents that you should buy stocks for maybe the long-term perspective, then you should also be mindful of what industry these stocks are operating or these companies are operating in. Because, for instance, you could have a very profitable company right now, But if they are involved in an industry that you could see that there are problems on the horizon, and maybe the whole industry that company is operating in is on the decline, then it might be a reason to actually sell out now, especially if it has a rich valuation right now. You could take some profits in that case, but not be there when the actual industry problems, so to speak, arise, and maybe the overall industry is not doing so great anymore. And then we have tax reasons, and we have this reason here, but because of course you can, for instance, use it to offset losses. So if you have some stock picks that didn't go so well, but you also have a few that you're thinking about selling out that are doing pretty well, you can kind of offset your losses by selling stocks that you have made a loss on and stocks that you have made a gain on at the same time, for instance. This is very basic of how it could work. You should definitely maybe even talk with a financial advisor if you're going to do it on a bigger scale, so to speak. But there are also in a lot of countries benefits of holding stocks for a very long time, but then you can eventually sell it, for instance, after a 1 year or a 10-year period. I know that in the US, they, for instance, have benefits if you hold stocks for a very long amount of time. So, for instance, if it is a stock that you're not that convinced about, you could, for instance, hold it for a set amount of time when you get this benefit and then sell out of it to transition into another company, for instance, just because you can get this tax benefits. Different countries can have different rules here. I don't think Finland have. We discussed in our tax video that Finland's long-term hold is not maybe the greatest, but it could be something to be mindful as well. And if you want to check out that more, we have a video on how taxes relate to investing and what kind of things you can do to, for instance, to offset your losses a bit, or if there are benefits of holding stocks and financial instruments for a long period of time.
Yeah, we'll link the video here. And then moving on, we also listed overvaluation. Now this one you have to really consider in greater detail. What we're thinking about here is that, say that you've made an intrinsic value calculation. If you're wondering how to do that, check out our latest video. I'll link that here. But you've made an intrinsic valuation, or you have a general idea where you think, what do you think is a fair evaluation of this business? And then all of a sudden it jumps up with like 20%. Then you might be very tempted to sell out because you've already made a gain then. However, this might not always be such a good idea in case it still like grows with time. But then again, what if it jumps up with like 100% and like from a fundamental standpoint, nothing has changed? Maybe even it has started changing sort of to the worst. So the main point with the overvaluation is that sometimes it's gonna be just too much. It's not gonna make any sense considering the intrinsic value. Then you might want to consider selling.
Okay, and the final reason we have also mentioned here, and this is a very minor thing, is that you can also sell just to trim your whole position, like your whole portfolio. Because, for instance, I've had sometimes very small positions that you invested in because you thought that maybe I will invest more in the future, but something changed. Maybe you found a better company to invest in, but you're still left with this small position that it's not really doing anything. It's just there, and you're not really convinced anymore in this company that you've invested into. There comes a point, I think, where it could be just good to trim this position out and sell out of it, just because it becomes like a distraction. You get a very big portfolio with small positions that you're not really convinced in. Then you could actually trim some of these smaller positions and sell out of them so that you can focus on the more companies where you have done your due diligence and you're really invested into, and not like spread it out between a lot of small positions that you're not so convinced in anymore and you've lost interest in, so to speak.
Yeah, and I think the great value with doing this is just financially it's probably not going to affect you that much, but from an attention perspective it's going to be great for you because it's going to allow you to really focus down and read more into the companies that you have put a decent amount into.
Yeah, I'd say that put your money where your conviction is, but don't have a few small positions that you're not very convinced in anymore and that just draws your attention.
Yeah, and take the time to research your convictions as well so that you know where you are putting that money, and this will allow you to spend less time but dive deeper into the ones that you feel convicted about. Now at this point, hopefully you learned something today and you feel better about when to sell your position. I would recommend that you watch the rest of the playlist if you haven't already, so that you actually can find the good investments to start with, because you can't sell a position if you haven't bought it yet. So check that out to make better investment decisions. I'll link it here. I'll also put as the end screen a video that YouTube's gonna recommend for you to be the best suited for you from our channel. And with that, all that is left for me to do now is wish you guys happy investing.
Happy investing. And be a hero. It's not going to zero.
NANI?! Nice.